Auditing and Assurance, April 2024. In our last lesson, we did question number 1. And candidates, I would want to encourage you as you attend these lessons, only come with your question paper and a blank foolscap or book and a pen. All right? Don't refer to your notes when we are answering questions, because in your exam you are only going to have the question paper. These are revision sessions. The assumption is that you have covered the syllabus, and even if you have not covered the syllabus, I've always encouraged my students to practice what we call active recall. Active recall is a learning technique that involves actively retrieving information from your memory rather than passively reviewing it. I want you to get it, candidates, that the best way to learn or to revise is to actively retrieve information from your memory rather than passively reviewing it. When I ask you a question, or when you are faced with the question and you refer to your notes, that is passive learning. But active recall is where you struggle to retrieve information from your memory. And it is considered one of the most effective ways to learn and to retain information. That is to say that you test yourself. It is the process of typically testing yourself on the material that you are trying to learn. Do you understand? And active recall works by strengthening what we call neural pathways. Neural pathways. It strengthens neural pathways. I'm talking about active recall. Active recall. That process of trying to remember from your memory, all right, strengthens the neural pathways that are associated with the information being retrieved. So when you try to recall something, your brain has to work harder to assess the information, which makes the memory stronger and more easily accessible in the future. It's called active recall or testing effect. Testing effect. Active recall or testing effects. And it has many benefits, candidates, because when you actively recall information, that improves retention of the information you are trying to recall. Do you understand? Active recall has been shown to significantly improve long-term retention of information compared to passive learning or just rereading. I know some of you are going to sit exams in 3 weeks or 2 weeks. So most of you have a tendency of just reading. After you've finished reading a chapter, then you come and read again, reading and rereading. That is what is called passive learning, and it is not effective. And some of you have a tendency of highlighting. When you are reading, you highlight your notes. That is passive reading. It is outdated. The best way to revise is to sit down with a question paper like this one and answer the questions without referring to your notes, because it improves retention. It may also help you identify knowledge gaps. All right? Because by testing yourself, you can quickly identify areas where you need to focus your study. All right. It also enhances understanding. Active recall forces you to actively process and organize information, leading to deeper understanding of the material. So there are many benefits, candidates. I hope that is important for you to note as we go into question number 2. We are going to answer question number 2. If time allows, we will answer question number 3 of the same sitting. Now, question 2A reads, Joe and Kim Associates, an audit firm, has been the auditor of Picture Limited for the past 5 years. The management of Picture Limited have been searching for a company to offer them tax consultancy services. They recently approached Joe and Kim Associates for these services. Required Roman 1. Enumerate 4 types of tax consultancy services that Joe and Kim Associates might be able to offer Picture Limited. Roman 2. Discuss 3 possible threats to independence that Joe and Kim Associates might be exposed to by offering tax services to Picture Limited. 6 marks. So let's first answer that part of the question. Question 2. This is question 2, part A. Types of consultancy services. Types of consultancy services. Now, candidates, here is a company, an audit firm. It's an audit firm. We are informed that this audit firm, known as Joe and Kim, has been the auditor of Picture Limited for the past 5 years. So the management of Picture Limited have been searching for a company to offer them tax consultancy services. And they recently approached Joe Kim Associates. Now, Joe Kim Associates is the auditor of Picture Limited. So the company has approached its auditors to offer consultancy services. So the question here is, what are the types of consultancy services that these auditors might be able to offer Picture Limited? Types of tax consultancy services. It is tax consultancy services. Tax consultancy services. Not just consultancy services, but tax consultancy services. Tax consultancy services. What do you think? Vivian says tax compliance. Tax compliance. Tax compliance. Please try to remember or imagine. You may have read about these services, or tax payables and refundable. Tax payables and refundable. Keep on. Drop the points, please. Keep dropping the points. Just write anything, please, that comes to your mind in relation to tax to tax consultancy services. What comes to your mind? Just write it. It doesn't have to be correct, but we are here to help you. What do you think, Gaspard? That part of the question has very little to do with auditing. It's just general knowledge. What are tax consultancy services? These are services that are related to tax matters. Okay? The auditors are to offer services to the company. These tax consultancy services are services that have to do with tax matters. All right? VAT. Gian says VAT. Merite says returns. Keep the points coming. You are doing well. Tax return services, assessment. All right, assessment. Write anything that you know, because I know you have a unit called public finance and tax. Can you borrow from your knowledge from that unit, in that unit, on taxation, tax services? Gian Bosco says local taxes. Local taxes. Tax advisory. Vivian says tax advisory. Tax advisory. So you are now getting the points. Drop any other point. Drop any other point. Tax consultancy services. Because candidates, companies operate in an environment where they are required to adhere to taxation laws. Taxation laws. So what are the services that a consultant can offer a company? Tax advisory. So the last point here is tax advisory. Tax advisory. Which is true. Tax advisory. Tax advisory. Advising the company on tax matters. Providing expert advice on specific questions or issues that arise. That is what we are referring to as tax advisory. You understand? The consultants can offer tax advisory to the company. And tax advisory is just expert advice on specific issues, such as tax implications of a new business venture. Okay? The expert, the tax expert may advise, for example, the company on implications, on the tax implications of new business ventures, or tax implications on international transactions, or even advisory on changes in tax laws. If you are in Kenya or any other country, the tax regime is always changing. Like in Kenya, recently there was the finance bill. When the bill is assented to, then that may affect different sectors in the economy. So a tax consultant may advise a company on the effect of such changes. You understand? That's what we are calling tax advisory. And that is a point that someone gave us here. Tax advisory. All right. Then someone talked about, Vivian stated here, tax compliance. Tax compliance. Now, candidates, businesses operate in an environment where they are required to adhere to tax laws. Okay, so when you say tax compliance, it's just complying to tax laws. So an expert may help a company to comply with tax laws. In this case, these auditors may help Pitcher Limited in preparing and filing their returns accurately. All right, someone talked about returns. Yes, Gaspard says tax return services. Now, tax return services, GASPAD, can be explained under tax compliance. Why do companies make tax returns? Is to comply with laws in relation to taxation. Right? So, a consultant can help a company to prepare tax returns, for example, and such preparation has to be done accurately and on time, ensuring they meet all the legal obligations so as to avoid penalties. So this is the second type of tax consultancy service, tax compliance. Okay. Bosco mentioned VAT. VAT is also part of compliance. All right. VAT returns are required to be made by companies, so that can also be discussed under tax compliance. All right. Cynthia mentioned tax payable. Tax payable is also under compliance. When a company pays taxes, it is comply when, because taxation, for example, corporation tax is a requirement. It is a requirement that companies, for example, pay 30% of the profit that are made or generated during an accounting period. So when you say tax payables, I think you are referring to the tax liability. Okay, that is still under compliance. Why do companies pay corporation tax? Why do companies pay taxes? So as to comply to taxation laws. There is a law that companies have to pay VAT, companies have to pay corporation tax, and any other types of taxes. So the points that you've given here can be summarized into these 2 points. Some of the points you gave are just examples on tax compliance. Then there is tax advisory. So you've done well to give 2 points. Candidates were to give 4. Can we have any other point? Tax planning. Emma says tax planning. Tax planning. That is the point, Emma. Tax planning is a type of consultancy service. Tax planning. Right? Now, the consultant here can advise the company on the most tax efficient strategies for their business operations, the best strategies for investments, and also financial decisions. Do you understand? Tax planning. We all know what a plan is. A plan is a predetermined course of action. So before the business engages in any undertaking, a business may call in a tax consultant to advise on the most tax efficient strategy for their business operations or investments or even financial decisions. And that could involve structuring transactions, that could involve utilizing tax incentives, that could involve optimizing deductions, because when a company optimizes deductions or expenses, that reduces tax liability. So a tax consultant can advise a company on how to best utilize strategies so as to reduce tax liability. Do you understand? Tax, that is tax planning. Any other point? George says tax dispute resolutions. Tax dispute resolutions. That is true. Tax dispute resolutions. Or we can just say resolutions is resolving disputes. The consultant can act as a representative, what we call tax representative in disputes. You understand, George? That can happen in under tax representation. There are times when disputes may arise between the company and the revenue authorities. So the tax consultant can represent this company in interactions with tax authorities, such as audits or disputes or appeals, okay? And that can help Pitcher Limited to navigate complex tax issues and protect their interests. If you have a dispute with the tax authorities, then a consultant firm or an expert, a tax expert, can represent you in such disputes, because the company may not have the expertise to protect its interests when there is a dispute with the tax authorities. So these are 4 types of tax consultancy services: tax advisory, tax compliance, tax planning, tax representation. 4 marks. 4 marks. Then part 2 of this question: discuss 3 possible threats to independence that Joe and Kim Associates might be exposed to by offering tax services to Pitcher Limited. Roman 2. This is A Roman 1. Then you have A Roman 2. I have to rename this. It's 1, 2, 3, 4. Roman 2, we are to discuss threats to independence. Threats to independence. Threats to independence. So candidates, you have to understand the question. Possible threats to independence that Joe and Kim Associates might be exposed to by offering tax services to Pitcher Limited. Now you will recall that Joe and Kim are the auditors of Pitcher Limited, and they have been approached by the company to come and offer tax services. So the question is, what are the possible threats to independence? What are the possible threats to independence? What do you think? What do you think? George asks about tax training. Tax training is also a point. I had not seen your point, George, but tax training is also a service that the consultancy firm can offer to the company. That is true. You can add it there. Make it the 5th point. Tax training is a service that can be offered. Merite says corruption. Cynthia says intimidation threat. Merite self-interest. Bribery and extortion threat. And while at it, please underline the word threat to independence. Threat to independence as you drop the points. Independence. Auditors' independence. You need to understand what is auditors' independence as you're answering that question. Auditors' independence means auditors being free from any influence or free from any relationships or free from any interest that could compromise their professional judgment. That's auditor's independence. And it is a fundamental principle of auditing. It is essential to ensure the credibility and reliability of audit opinions. Bear in mind, it is threat to independence. It's not just threat to independence. Cynthia says familiarity threat. Now that you have the right context of the question, are your answers still valid? Is overdue fee still an answer, or you want to discount it? Is fraud and error threat? Is fraud and error a threat? Right. So now that you've understood the point, is intimidation a threat to independence? It could be, could be not. So, but I've seen familiarity. For you to understand this question, you have to understand what we mean by auditor's independence. The auditor should be free from any influence. An auditor is required to be free from any influence. Anything that can jeopardize his judgment. Candidates, you recall that an auditor comes in to examine the financial statements of the company. This is an auditor of Picture Limited. Before we come to consultancy services, this is a person who has been auditing, or a firm that has been auditing the company for the last 5 years. That's what we read. All right. And for an auditor to exercise or to carry out his function objectively, he is required to be independent. He's supposed to give an independent opinion. But there are some situations that can threaten his independence, what we are calling threats to independence. So an auditor is required to be free from any interactions or any influences that will affect his independence. An auditor is independent because, firstly, candidates, he does not report to the management. The auditor reports directly to the owners of the company. He's appointed by the owners of the company to examine the records, the financial statements that are prepared by the management. So someone here says one threat is familiarity, which is true. Familiarity. From the word familiar, which means close interaction. By taking up the work of a tax consultant, it is like he's going to work for the company. So he will be having very close interactions with the management of the company, with the employees of the company. Do you understand? So there is that threat we are calling familiarity threat. Close interaction with Picture Limited's management and employees through tax consultancy could lead to familiarity threat, where the audit firm becomes too sympathetic to Picture Limited's viewpoint and is likely to exercise professional skepticism, will hinder his professional skepticism as an auditor. Do you understand? Familiarity threat. The auditor will be working very closely with the management and the workers if he takes up this work of offering tax consultancy services, and that may be a threat to his independence. Okay? When you are too close to someone, you become familiar. You may not objectively evaluate their viewpoints because of familiarity. Do you understand? That is true. There is another point here that someone mentioned. What was it? Self-review threat. Merite says self-review threat. Self-review threat. That is true. This auditor is going to perform tax consultancy services. He will be helping the company in complying. Some of you had talked about making VAT returns, submitting returns, tax planning. All right. So if the auditor will be the one helping the company in submitting, say, VAT returns and any other returns, even in tax planning, it is, do you understand, candidates? These are the services the auditor, this audit firm is going to perform. And that poses a self-review threat. That is to mean that this auditor will be reviewing his own work, because an auditor is required to carry out an examination or a review of the financial statements or accounting records of a company. Okay? If Joe, in other words, that is to say, candidates, if Joe and Kim Associates provide tax consultancy services that involve making significant judgment or assumptions about Pitcher's tax position, they may later have to review their own work as auditors. The same thing as preparing records. Because given that they are the auditors of this company, they may be forced again to come and review their own work. That's why we're calling it self-review. And how do you review your own work? If you've made a mistake, will you accept that you've made a mistake? Or if you have not complied in the process of carrying out tax consultant services, you see, it becomes very tricky to be objective if you are reviewing your own work. It's like the exam you are going to sit, candidates. You can imagine you are the one to mark your work. Can you imagine if CASNEB tells you that the paper that you are sitting, you'll be called upon to come and mark it and give yourself marks, and then even after marking, that marking is not reviewed? What do you think? Are you going to be objective? So that is a threat. All right. Someone says, Emma says advocacy. Advocacy threat. Advocacy threat. That again is a threat. Advocacy is derived from the word advocate. By offering tax services, Joe and Kim Associates may become too closely aligned with the company's interests. This company, the auditors, may aggressively advocate for tax positions that could conflict with their duty as auditors to provide independent opinion on the financial statements. When they are closely related, then the auditors may become too closely aligned with the company, with the interests of the company, advocating for aggressive tax positions. And that is what we are referring to as the advocacy threat. Advocacy threat. Let me hear from Cynthia. Says self-interest. Self-interest. Self-interest threat. Self-interest threat. What is self-interest threat? Cynthia, what do you mean by self-interest? What do you mean by self-interest threat? Cynthia says self-interest threat. Because we know self-interest threat is referring to having a benefit, is it not? Is it not a benefit to the auditor, financially or otherwise? How do you explain it? What do you mean by self-interest rate? It is true, there is a threat known as self-interest, but how do you explain it in the context of an auditor providing tax consultancy services? Emma says self-interest refers to receiving benefits from a client compared to any other person in the company. That is true. So what benefit will the auditors be enjoying? And a good example, for those of you who may not be conversant, a good example of self-interest rate is financial interest. We are talking about self-interest. A good example is a financial interest. And that could be where the auditor holds a financial interest in the client, such as owning shares. Where an auditor owns shares in a company that he audits, then we say he has a financial interest. Or where an auditor or the firm of the auditor has a close business relationship with the client. And that is true. So self-interest. That is a point. Self-interest threat. So we have seen this auditor provides services, non-audit services, all right? Provides non-audit services. So that is a financial interest threat. Because there is that fees that the auditor earns from the tax consultancy services, which could create a financial interest threat. So it is not just a self-interest threat. There are many types of self-interest threat. This one is a financial interest threat. Remember I said that it could be the auditor holding some shares in a company. So that is a threat. Do you understand? This is where now Joe and Kim Associates become overly reliant on Pitcher Limited for their revenue because they are offering all these services. If the auditors are only offering these services and maybe they do not have any other source of income, maybe this company is the main source of income, then it becomes a threat to their independence. So we are discussing threat to independence candidates. When an auditor, you can imagine this auditor, assume or imagine this audit firm only has Kim Limited as their client and they are enjoying all these the financial interest. We are talking about financial interest because of the revenue that they may obtain from offering this service. So this audit firm may overly, excessively rely on Pitcher Limited for revenue, which makes them less likely to challenge the company's tax positions or even to report irregularities, because that is their main source of revenue. So it is a threat to the auditor's independence. Do you understand? You understand, my people? So you need to understand, as much as the threats to independence, they are just for here, you need to understand that there are many types of self-interest threats apart from the financial interest. We may have close business relationships, we may have employment with the client, we may have many other aspects of self-interest. Merite says getting an offer from the client or management. Threat. Which other threat? Threat. Undue hospitality. Emma says undue hospitality. I would rather go with undue influence. Undue influence threat. Undue influence threat. That is a threat to the auditor's independence. That will be a threat to Joe and Kim Associates independence. Undue influence threat. Undue influence threat. And to explain that, candidates, Pitcher Limited here, because they are offering the auditor with all these jobs, because this is tax consultant services and again auditing services. The audit firm does not just provide audit services, it also provides non-audit services. So the company may have undue influence over the auditors. Pitcher Limited may exert undue influence over Joe and Kim Associates if they perceive that the audit firm's fees for tax services are significant, which may potentially compromise the auditor's independence and objectivity. Undue influence. Do you understand? So these are 1, 2, 3, 4, 5. You are to give 3. I think we've given 5. These are 5. 5 possible threats. So it's important for you to be familiar with all these threats. So that is part A of the question. Part B reads, summarize 5 ways in which the management could detect or prevent errors and frauds. Cynthia says intimidation. That is true. This company can intimidate these auditors because they are giving them jobs. Intimidation is related to undue influence. The company may have great influence over the auditors because of the many jobs, and therefore the management can easily intimidate the auditors not to be independent, not to give a true perspective of the company's state of affairs. Now tell me, what are the ways to detect and prevent fraud in a company? Emma says internal control system detect errors and prevent fraud. Strengthening ICS, continuous monitoring of the effectiveness of systems, appointing qualified staff, Yeah, maybe qualified staff can, Vincent, qualified staff can help in prevention of errors. But for fraud, the qualified ones can be most dangerous. True, Gaspard says segregation of duties. That is true. The first point you dropped is on internal controls. Internal controls. Internal controls. Internal controls. Someone says compliance with regulatory and authorities. So internal controls, implementing comprehensive internal control system. That is true. Implementing system of internal controls that includes what? Policies, procedures. Then there is segregation of duties. Segregation. There are many points, candidates, and the points you are dropping are segregation of duties. Those are good points. I've seen another point. Instilling sense of ethics. Yeah, sense of ethics, because fraud is just unethical behavior. That is true, Gaspard. Instill sense of ethics. That's a point. Instilling sense of ethics, ethical behavior. That means creating an environment, an ethical environment, and it begins by leading by example, where you have the top management being conscious of ethical behavior that can influence the rest of the organization. The tone, it's called the tone at the top, should be an ethical tone. That is true. That can prevent fraud. When everyone knows that the manager does not tolerate fraud or errors, then that can help prevent fraud and errors. For example, errors that are committed out of negligence. Right is surprise audits. Surprise audits or checks. Conducting unannounced audits to verify the accuracy of records and also identifying irregularities that can prevent fraud. Such audits can deter fraudulent activity and provide valuable feedback on the effectiveness of internal control system. Another way is whistleblower hotline. Whistleblower hotline that can prevent fraud. Establishing a confidential reporting mechanism, for example, a hotline, or it could be an online portal that encourages employees to report suspected fraud or unethical behavior without the fear of retaliation. That can help detect fraud early before it escalates. Whistleblower hotline. Okay. Another way is data analytics. Taking advantage of technology, data analytics, utilizing data analytics tools. These tools can help to monitor transactions and identify patterns or even anomalies that may indicate fraudulent activity. And that can involve analyzing large volumes of data to spot unusual events or deviations from expected norms. Data analytics. Data analytics tools candidates can help to a great extent in detecting and preventing fraud and errors. And here, candidates, we are discussing two things: fraud and errors. Fraud and errors. In our normal class, we distinguished what is the difference between fraud and errors. And we saw that fraud is intentional, but errors are not. So take note of the two. So when you give, the examiner was not specific. Okay? It's not specific. But most of these points are in relation to fraud. And internal controls can also help detect errors. So in your revising, please try to distinguish. You may be asked a question: what is the distinction between, in the context of auditing, what is the distinction between fraud and errors? You should be able to give 5 distinctions between fraud and errors. So that is it for part B.